Hey everyone, welcome to the monthly market update. July 2025 definitely had a lot going on. The S&P 500 notched 10 all-time highs, fueled by good company earnings, AI enthusiasm, and a temporary truce on tariffs. Despite a bumpy start to the year, the S&P 500 is up 8.6% in total return, meaning we're including dividends in that return. Big tech led the charge again. Microsoft joined Nvidia in the $4 trillion club, and Nvidia itself jumped 13% in July alone. Investors continued to ride the AI wave, while Tesla lagged behind with weaker results. But it wasn't all smooth sailing. Although the White House announced several new trade deals in July, including with the EU, Japan, and South Korea, there are many countries that have not negotiated an agreement on tariffs yet. New tariff rates for those countries are set to go into effect August 7th. You're definitely going to pay attention to how that impacts markets moving forward. On the jobs front, July's numbers came in soft, with just 73,000 jobs added in the month of July, with significant downward revisions for previous months, totaling 256,000 fewer jobs added than initially anticipated. The Bureau of Labor Statistics Commissioner was subsequently fired by President Trump. This move is well within his rights. For investors, we hope the new appointee puts out accurate information, because this will be information that the Federal Reserve and economists use to make future projections. Unemployment slightly rose to 4.2%, but the Federal Reserve may need to weigh slower labor momentum as it considers future moves. While they held steady in July, there is a lot of expectation for a decrease in September interest rates. In July, all company reports showed how they did in the second quarter. The earnings reports were positive, driving markets higher. Elsewhere, Bitcoin hit a new high of 120,000 before having a little bit of a pullback. This is due to having the legislation passed in its favor, as well as being a product that is minimally impacted by politics and tariff news. And in Washington, a sweeping tax bill made the Trump tax cut permanent, adding certainty for investors, but also raising concerns for the sustainability of the growing national debt. The bottom line, the soft landing, which many of you may have heard, meaning no recession, is still very much intact. We have moderate inflation, a steady, albeit softening labor market, and a Federal Reserve signaling lower interest rates. Still, elevated valuations in the growth sector, a few companies that are really doing most of the legwork, and renewed concerns over national debt may challenge investor confidence in this environment. Maintaining diversification and staying prepared to capitalize on any market pullbacks is going to be key during the season. As always, we appreciate your business, but we value your trust. If you have any questions about your financial planning, please reach out to the office, and in the meantime, I'll keep you posted.